Welcome back, traders. Hope the week's wins left your positions feeling as pumped as ours after that inflation curveball handed the bulls a victory lap with fresh records across the board. From paths, breakout fireworks, to metals' quiet cooldown, we closed strong but with setups begging for next week's follow-through. You're tuned into the Stock Market Summary Series, and as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education, but nothing we say here is financial advice. Okay, let's get into it. The action today really felt like a clean continuation of those late session accumulation signals we mentioned last week.
Yeah, absolutely. It was definitely decisive follow through. But, the really interesting part wasn't just the new highs everywhere. It was the breadth.
Right.
I mean, sure, SPY up 0.82%, 2QQ 1.07%, DIA 1.05%, all fresh all-time highs. Great. But look at the small caps. IWM just ripping 1.23%.
That's a strong signal.
It really is. Seeing that kind of outperformance, it's just risk appetite is, widening out beyond just the usual big tech names. Though tech, XLK, it still led the sectors, up, 1.59%?
Yeah, strong show in there. Energy, XLE was the laggard, though. Down about 1%.
Right. A little bit of sector rotation, maybe.
And speaking of technicals, some of those watch list names really delivered. IGV, the software index, that finally broke clean out of that bull flag we've been watching on the daily.
Yep. Saw that. Classic continuation signal.
And PLTR finally surged higher, right? Snapping out of that tight little consolidation it was in.
It did. But Path, UiPath, ticker Path.
Oh.
That was pretty much textbook, wasn't it?
Oh, yeah. Classic continuation, powered right through that bull pullback pattern and the volume.
Exactly. On spiking volume and bouncing right off the 20-day moving average.
That 20-day acting like a nice floor there shows real underlying support from longer-term buyers holding the line during the pullback.
Absolutely. And seeing that heavy volume confirmation on a setup like Path, well, that's crucial. It really is. Being able to spot those high conviction trades is one thing. But then having the, let's say, ironclad risk rules and the precise timing to actually capture the move, that's what makes for consistency. It's that mix, pattern recognition plus discipline execution. That's exactly the kind of thing we drill constantly in the Grok Trade mentorship.
Makes sense. You need both.
You really do. And look, that technical momentum, it got a huge tailwind today from the economic data. We got that PCE number.
Inflation print, yeah.
Right, the Personal Consumption Expenditures Index. And it was definitely a dovish surprise. September core PCE came in softer than expected, 0.2% month over month instead of the 0.3% folks were looking for.
Okay.
And the headline PCE, flat, 0% month over month. Way below the 0.4% expected. So that immediately just eased those Fed hike fears.
And poured jet fuel on the fire.
Pretty much, yeah. Gave equities that extra pop.
It certainly shifted the mood fast. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe too, so you don't miss a beat. You can always unsubscribe later. Now, while the market loved that inflation news, we do still have that government shutdown haze just kind of lingering, right? Day 24 now, and still no breakthrough.
Yeah, that's the background noise, isn't it? Definitely a risk factor we can't just, ignore.
True. Okay, shifting gears. Crypto. Still kind of stuck.
Pretty much in a holding pattern, yeah. Bitcoin edged up a little, maybe 0.42%, something like that. But it's still sort of wrestling with those downward sloping 20 and 50-day moving averages just overhead. Those are the key resistance levels in the short term.
But buyers are holding the longer-term line.
Seems like it. They are successfully defending the 200-day MA, that big long-term trend line. So despite all the chop, that key structural support is holding for now. Interesting dynamic there.
And metals.
Yeah.
Looked like they took a breather after that, epic run they had.
Definitely a cool down. Gold slipped about 0.34%, silver down 0.43%. Feels like, textbook consolidation. Some profit taking heading into the weekend.
Rather than a big reversal?
I think so, yeah. Doesn't look like a major shift yet. We'll have to see what the dollar and yields do next week. That'll likely dictate if metals can get going again.
Gotcha.
Days like today really, really confirm why having clear, repeatable methods matters so much. When you see these volume-confirmed breakouts like Path or successful flag resolutions like IGV, it just validates the edge you get from, relentless focus on pattern recognition and that precise risk management. These are exactly the skills we focus on refining constantly with coach support inside the Grok Trade mentorship program until that investment pays for itself.
So, wrapping up on today's record-smashing rally, looks like a clean extension of the strength we saw building. Definitely got that jet fuel from the soft inflation data, and we saw some really nice technical confirmations on the watch list. Makes you wonder, how do you read past Pete's volume surge or IWM's outperformance heading into the weekend? Something to think about. Wish you a great weekend, stay safe, and tune in next week as we continue to cover the markets and the developments we've mentioned.